So we do have this recorded. If you ever have to hop in, hop out, no worries. We will post it later. But for this training session, we're going to go over futures. So I'll hand it over to Swaggyp in a second. He is our futures analyst. So he's going to go over the different types of futures that are available to trade, the requirements to trade, kind of how much you can make when the hours are you're able to trade futures, and all that type of stuff. So go ahead, Swaggyp, do your thing.
Got it. Thanks everyone for joining in. So I'm just the best thing to do is either type your notes or have a notepad and write everything down. Once I'm done, I'll open it up to any of the other analysts that want to say anything, and then questions if you guys have any. That'll be at the end. So about futures. Basically, I'm going to be talking about two big names that we trade on our channel, the S&P 500 and the Nasdaq 100. So the S&P 500, the ticker for that is ES. Some of the tickers they don't have a backslash on it, but softwares like TD Ameritrade has a backslash on it in order to get to that ticker name. So ES is one of them, and then the second one is NQ, which is the Nasdaq. Now, what futures have are like they have expiration dates, but they kind of don't really count because you could always roll them over to the next month, and instead of like options which expire on a certain date, you could just continuously roll over your contracts and stay in that contract for as long as you want. So what are futures? So futures is basically there's a buyer and a seller of an asset. We have there's also commodity futures like wheat, rice, oil, but this is actually the market futures for the Nasdaq and S&P 500. So it's basically you're buying an agreement, you're buying a contract, and you're agreeing with someone for the future at the current price. And some of the things that commodities have are standardization, which is, for example, oil would be like if you buy a contract, I'm buying 1,000 barrels of it at a time. But there's no such thing like that in the Nasdaq or S&P 500. Now, one main thing to know, depending on how you trade, what type of trader you are, and depending on how your portfolio is, there's hedgers and there's speculators. Those two people are the ones that make up the market for futures. Hedgers, as in if you're long in positions and then you want to hedge your portfolio just in case there is some downside, like when we make all-time highs constantly. And if you're long in calls and you want to hedge a position, it's very smart to hedge with the futures. And you don't have to buy the big name ones of ES and NQ. You could buy MES, which is a tenth of ES, and then MNQ, which is a tenth of NQ. And speculators are those that buy and sell continuously. So I do both of them. One portfolio I'm hedging, one portfolio I'm a speculator. I'm going short and I'm long. It's very easy when it comes to pricing and all that because you're only buying a contract to go long and you're selling it to close it out, and you're selling a contract to go short and you're buying it to close it out. So there's only two buttons to press at that point. Now, the way these contracts are named, as I said, they have expiration months. So March has H in it, June has M, September has U, and December has Z. So currently, any ticker we type in, for example, NASDAQ, it would be NQZ21 because that's the year that we're in. After when that expiration date comes closer that week, I'll switch over to charting and buying March ones now. So I'll be buying NQH22 starting on quad witching week. Sure, you guys know what that is. It's a quarterly expiration date for options, for futures, and that week, a lot of traders don't trade that week because of this transition. Now, I'll talk to you guys about the fees, how much margin you need, and all that stuff. So, because it's a sophisticated way of trading, not many people do it. Require you to have a margin account and a balance for it, and you need to be approved. I'll give an example. I know off of TD Ameritrade, options is 65 cents, right, per contract, per transaction. So it's $1.30 round trip. So same thing like that for fees for a futures contract is MES is $2.52, and then ES is $3.50. And then same thing correlates with MNQ and NQ. Those fees are set. Now there's a margin requirement on how much you're going to put up front. So basically it's like I think of it as a entry ticket, but you also get that back when you close your contract out. You're not losing anything you put up front. All you're losing or gaining is the value that the tick has. So ES, which is S&P 500, one tick is 0.25. So each tick is worth $12.50. So if you correlate that with the point, every point is worth $50. Now the margin requirement, as of right now, I'll give the example of TD Ameritrade, is $15,813. And your maintenance is a requirement that your account balance should have at the end of the day. If you reach this maintenance, and if your account goes below it, you basically have to close your contracts, or you have to put money in to still hold the contract at the end of the day. And your bank would contact you at this point. So the maintenance is determined by taking the margin requirement, dividing that by 1.1 is your maintenance that you would need on the account. And then you have your MES, which is just a tenth of it. So it's $1.25 per tick, and it's $5 per point. The Nasdaq is $5 per tick and $20 per point, and MNQ is 50 cents per tick and $2 per point. Depending on which one you like, you could trade. I personally like to trade the Nasdaq a lot more because of the way it moves. The Nasdaq right now is in the 16,000s, and versus the S&P 500 is in the 4,600 range. So I see more of a quicker gain, and that's why I trade the Nasdaq a lot more than I do S&P 500. So I basically just went over what futures are, and the main futures that we trade in this group. But you could correlate this to any other futures out there. And futures, the thing is, it runs almost 24 hours a day for 5 days a week. So even when the market is closed and your portfolio is long and the market tanks, like on news it did this week, the thing I had a hedge on, which I sold that hedge at the end of the day on Friday. So, but my portfolio, stayed balanced. It didn't lose amount. It was balanced out. So I'm going to talk to you now about some strategies that you guys could use. There's a lot of strategies out there that you guys could use on any stocks and stuff, but it all depends on what you guys are comfortable with. Example, I'll just show you guys here, would be some support resistance lines. Like I'm looking at some support resistance lines that I just made for this, and this is basically, my resistance line here. And you could do all these patterns and stuff that we have described on our educational tab, and then go long or go short depending on what you think is going to happen in the market. Other strategies are supply and demand. I'm very heavy on it. So basically, I look at the candle, look at the chart. Is basically, it's not time based. Not much on time based. It's more of how the candle looks. So what I do is I start off with a higher time frame, 4 hour, and then see where I see my trend changes, and that's where I see buyers and sellers stepping in. So currently, as you can see on Nasdaq, this is in my no trade zone. I'm not trading right now. I want to see what happens. If we fall out that zone, I may consider to go short. But with all this news that came out on the variant not being so strong and stuff, they picked the market back up. Now we could see that this may be a dead cat bounce, or we may tank down. We just have to be on our feet. But every single day, I'm looking at futures just to see where the market is gonna head to. So yeah, this strategy right here on Friday, we bounced directly off of our demand zone and went straight up to supply. Literally a zone to zone trade. I mean, I went long as soon as we opened at 6 p.m. and it paid. So futures, the timings are 6 p.m. So it starts on a Sunday, and then we'll close out at like 4:15, and then they have because of a margin account, banks have to balance everyone out. They have to do a margin call if an account has one. So they take a break, and then they pretty much it starts again at 6 o'clock. I don't recommend trading in the hours of 4 p.m. and 6 p.m. at all, because you just shouldn't. But 6 p.m. once it starts and then ends at 4 p.m. or at 4:15, you take that break, you start again on Monday, and then on Friday officially everything closes at 4:15. So those are the timings for it. Other strategies are EMAs. I have them here. I personally like using the 10 EMA, 21, 50, 100, 200, 400. And so you guys can see here, they're actually just lined up beautifully, except this one is the VWAP. So these are, rejection points I see on how I chart. I scalp on futures, so I'm in and out constantly. Any first rejection point I see, I'll sell it. And that's how I trade as a speculator. But as a hedger, I'll just go short or go long depending on how my portfolio is, and then I'll think about when I want to get out for how many ticks. I mentioned looking at different candlesticks. I mean, time frames. So candlesticks. Now, people could use, you have your regular sticks right here. I use Hakanashi ones too at times. There's Rinko. There's all these candlesticks out there. Again, depends on which one you guys like to use. I personally, on 1 minute and 5 minute, use Hakanashi, but on any higher time frame, like to build my zones and stuff, I'll use regular candles. You can't use any other candles when you build your zones. And then one insight I want to give you guys is order flow and bookmap. This is something I came across recently, and it has changed the game for me for sure. So what bookmap and order flow is it's basically, order flow is like, where most of the buyers are stepping in, or most of the sellers are. Those are, points on the chart where it's going to be hard to get through. And then Bookmap actually shows you this in real time every single day. And if you just take a look at it for the week or for the day, okay, these these are the targets. If they pass this, then they're gonna eat up some shorts, or they're gonna take out any stop losses that they have. So that's one big thing I came across. You guys could look into it. There's different sites and stuff that give this information to you guys. It's a very helpful tool. Now you guys saw the prices. We just posted. Tom just posted it on our main chat. Now you guys may think these prices are thousands, 23K. That's a lot of capital. You may not want to use your own. There's companies out there actually that you could pass their course, become a disciplined trader, and get funded too. You guys could do a simple Google search on that. There's so many out there, but if you're in that case where you can't afford to buy the big ones, then get a funding account. And look at what the rules are and pass their course. It's still a great tool. And then lastly, I'm just gonna give you guys keynotes on futures. So psychology behind futures is, if it's not going in your direction, you're gonna want to get out. You should not stay in a trade that is not going in your direction. Have a mental stop loss. I don't recommend putting a stop loss on your account, just because market makers see this and they may just eat it up, and it has happened to me. So I just keep a mental stop loss. So when I'm in a trade, I'm staring at that chart. I'm not going away. I'm not stepping away, no matter what. And because of the time that futures are out, I could trade whenever I want. At night, during the day, if people have work during the day, futures is something to get into, so you could trade at night. Risk to reward. Play high probable scenarios. Reason I post all these charts up is because I see where we could turn around. So I'm not playing in the zones. Once we come out the zone, I'll go long or I'll go short, depending on how the market is. So yeah, remember risk to reward. And you always want to tell yourself if then statements. If this happens, then this will happen. And see how many points you could milk out. And if you see a rejection point, or if you feel like it's gonna come down, it's not gonna go my way anymore, cut it. Or have trailing stop losses that you mentally have. Like, okay, if it comes back down to like 20 more points, I'll sell it. But make sure your reward is also there. You're not only paying for 5 more points, but risking 20 at that point. And watch price action. Basically, way I see it is how quickly that price is moving. Nasdaq jumps around like crazy. Today it was just jumping like 10, 20 points at a time at open. But ES, on the other hand, it moves pretty slowly. And sometimes you get bored of it too, because it moves very slowly. But yeah, watch out for price action. Remember, there's always false breakouts that happen. But if there's never going to be 10 false breakouts at a time. Maybe there's 3 false ones, but 7 of them will win. So you're going to profit 70% of the time. The way, if you guys never have done futures, how I started was practice and watch. Just watch the chart. Just play on the computer screen. Just watch how it moves. See what's happening. There's practice accounts out there that you guys could use. There's so many out there. I do believe every trading platform should have a practice account. There's no need to force and pray for something to go in your direction, especially for futures. Because you could win so quickly, you could also lose that much very quickly. Have patience. Sometimes I don't even trade on futures as much. I would love to trade, but there's no direction. There's no point in you trading as a speculator. As a hedger, yes, but as a speculator, there's no reason for you guys to trade when it's choppy and when there's no direction. And let the trade come to you. Once all of your points are lined up, just have a checklist. Okay, is this happening? Is this happening? Check the boxes off, and if that's happening, either go long or go short. And yeah, that's pretty much what I had to say for futures trading. If you guys have any questions, obviously just reach out to any one of us or me. I'll be more than happy to help. If anything I didn't cover, any of the analysts in this chat live right now wants to say anything, more than welcome to say anything.
Yeah. So thank you, Swaggy. I do want to highlight a couple of key important parts. So the key takeaways that I want you guys to remember is, so whether you're trading futures or not, it's important to always watch them so you can highlight the overall strength or weakness of the market. So for example, if you're looking to buy calls on Apple or something of that sorts, I would definitely recommend checking out ES, so the S&P futures, to see what the relative strength or weakness is. So if it is starting to downtrend and Apple's still looking good, you might want to reconsider, and vice versa. Another thing is the importance of futures is being able to trade pretty much whenever you want. So like Swaggy was saying, you're able to trade about 22 hours of the day for 6 days of the week. So whether you're busy at work or you're just caught up with day-to-day life, it provides that flexibility. Also, it's able to indicate where the market may open. So you get to take a look at it in the morning. It's really good to take a gauge at that instead of just staring at Apple's pre-market price. And then another important part is not having that expiration. So having that stress of getting your contract to your desired price point by a certain time. So futures, it's a little bit more relaxed. And then, like I sent in the main chat, the price points and what Swaggy covered, you have the ability to trade micros or minis. So with micros, it's 1/10 of the price. So if you want to trade S&P futures, the micros, it's about $1,500 a contract, and you'll make $5 for every $1 it goes up. So you can trade, when I was starting out, I was trading 4 or 5 of those at a time. So, 5 of them is $25 a $1 move. And then the last part I want to cover is it's a really good way to hedge your shares or your options. So if you're mostly call heavy and you're swinging overnight, you might want to go short on the futures just to protect yourself. So yeah, if any of you guys have questions, feel free, ask away, whether you want to ask in the chat or open your mic. And yeah, feel free. Or T-Bone too. I know you trade futures all the time. If you have anything to add. Or Dustin.
I don't think I have anything to add in particular. It was a pretty solid explanation of futures for the moment. I would say, if anything, if you do start trading futures, there tends to be a large spike in volume around like 3 to 4 a.m. Eastern time. It's usually when a lot of people start waking up to start trading for the day. So you'll see kind of stagnant price action maybe a couple hours before that. But come around 4 a.m., I'd say Eastern time, that's when the market starts waking up and you'll start seeing more movement. And then pre-market, it's very, very, very much awake. So yeah, it's awesome. That's awesome. That's a lot of fun too.
Yeah, one thing I want to add to that is that on our futures chat, we actually have a pinned on when international markets open, like when Asia opens, Europe opens, Africa, South America. When they're open and when they're closed. Like just Justin said about the volume spike. You'll see that volume spike happening at those times. So also be aware of that, especially that 4 a.m. mark. Trust me, if I was awake at 3 a.m., I would be trading that thing. It has one direction, mostly 90% of the time, and it either tanks or flies.
Absolutely.
How much is to add Bookmap? So I know TD Ameritrade has Bookmap for like $40 a month. But there's also the Bookmap site itself that you could trade it on. I'm not sure how much that is. It runs a couple hundred. I know that does get pretty expensive, but again, if you're trading futures like the big one, you could cover that cost, within one day easily.
So yeah, we did record this if you guys ever want to come back and watch it. But yeah, any other questions, just feel free to ask in the chat at any time. But appreciate you guys all tuning in.